the success stories of crypto's early years, there's still a lot of uncertainty around the stability of its markets and the lack of regulation. But as we've heard, some of the most popular digital currencies have proven more resilient than first feared. So what lessons do we take from the story of crypto so far? And to delve deeper into this, I'm delighted to welcome Emily Nicolle, who is the FinTech correspondent for Bloomberg, and she'll be speaking with Kiernan, the founder and CEO of Greengage, as well as Sushil, the FinTech regulatory lawyer for Gowling. Please welcome them.
Hello. Oh yes, you can all hear me, great. Thanks for coming back from the break. I hope we have a really interesting session for you today. We're going to be talking about crypto. I think this is probably one of the only crypto-focused sessions that wasn't Brian Armstrong this morning, so hopefully we'll really get into the nitty-gritty of it. It's been a difficult year for crypto, but I think this week is probably one of the biggest for regulation, right? We've got the European Union's Markets in Crypto Assets Directive set to be approved on Thursday, and the UK has been making its own moves. But let me just introduce our panel first. So do you want to go first and then?
Sure. Hi, everyone. My name is Sushil. I'm a financial services regulatory lawyer at Gowling WLG, having spent 8 years at the FCA, where I spent 4 years in their supervision division and 4 years in its enforcement division.
My name is Kiernan. I'm the CEO and founder of Greengage, which is a digital merchant banking pioneer. We offer e-money accounts to crypto companies, but not exclusively, GBP Euro. And we also have a platform for B2B lending, including digital and traditional sources of money.
And so as we kind of hinted before, the UK is a little bit fragmented at the moment. We've got some moves happening elsewhere. So Sushil, can you kind of tell us, what does the regulatory landscape look like at the minute, for the UK in particular?
Yeah, well, I think it's probably safe to say that the UK has been taking a steady and sort of phased approach to regulation. It's been carefully considering the uses, risks and benefits of crypto and the scale of the activity in relation to crypto so far, and in determining really what the right regulatory approach is to crypto assets. Now, since 2018, when the Crypto Assets Task Force was formed, comprising of FCA, HMT and the Bank of England, there has been a steady stream of regulatory intervention. I think they realised at the time that distributed ledger technology, DLT, has the potential to deliver significant benefits for financial services, but with that also come big risks as well. And I think at the time it was like the focus was on financial crime. So following that, the FCA issued its final guidance in 2019, expressing how crypto assets are currently regulated, and that really sets out the current regulatory framework at the moment. So there is no crypto-specific focused regulatory framework, but essentially at a high level, and it really depends on the nature of the crypto assets that you're talking about, but if you're doing any regulated activities in respect of regulated tokens, which largely comprise security tokens, so those that have hallmarks of traditional investments such as shares or debt instruments, or their e-money tokens, so they're tokens which meet the definition of electronic money in the UK, then those are regulated, and anyone doing regulated activities in respect to regulated tokens needs to be FCA authorised and comply with a whole raft of sort of detailed FCA rules in that regard. And then swiftly afterwards, talked about financial crime being the pressing issue at the time. In 2020, crypto assets became subject to the UK anti-money laundering regime, so requiring crypto asset wallet providers and crypto asset exchange providers to be registered with the FCA for AML purposes. Now, many of you in the audience are probably aware that that hasn't been going too well for many, and I think the last indication was as at March 2023, this year, only 15% of those applications had been approved. Now, that is the current regulatory framework in a nutshell, but that's not the end. There are developments currently in train, and I think the key aspects that are coming through now are financial promotions. So while the Advertising Standards Authority has been doing a great job in sort of tackling irresponsible crypto asset, unregulated crypto asset promotions, I think there's general feeling that with the number of crypto asset adverts that are out there, the increase in the number of consumers that are owning crypto assets now, and the fact that we need like sort of a consistent approach to promotions within financial services, they are taking steps now to introduce, well, to make qualifying crypto assets subject to the UK financial promotions regime. And then with the Financial Services and Markets Bill currently going through as well, they're legislating to create a framework specifically for fiat-backed stable coins, which are used as a means of payment. Again, probably because of the potential for crypto to be used as a means of payment quite widely and quite quickly. And then the latest set of developments has been the HMT consultation paper in terms of the future regulatory regime for crypto assets, whereby if they're taking a similar approach to same risk, same regulatory outcome approach for traditional financial services, focusing on those areas where they perceive the biggest risks and biggest opportunities to be. So let's think about the current types of activities that will fall within regulation in respect of crypto assets. They will be the likes of lending, arranging deals in crypto assets, dealing as principal and agent, and so on. So it's going to have a similar regime as the current framework. But I think the key difference is, before I talked about understanding the nature of the crypto assets in the current regime, going forward, it's going to be the activity that's being conducted, which is going to be the main difference. So currently, you have a batch of crypto assets. If they don't meet the definition of e-money, or if they're not classified as security tokens, they're currently unregulated.
Which is most of them, for the most part, not Bitcoin,
which are most of them. So they're currently unregulated. Going forward, in the new regulatory framework, is the activity that's going to be sort of the focus area. So if you're doing a regulated activity in respect of even some of the currently unregulated crypto assets, then you're potentially caught.
I hope you guys were all taking notes there, because that was a real crash course.
That was in a nutshell.
And so how has that attitude towards regulation really changed in the last year, Sean? Because we've seen the collapse of FTX, the collapse of Terra, all of these things really put regulators on the back foot and forced a real impetus forward. How has it changed since then?
I think the industry really welcomes this. Most people I know in the industry want responsive and appropriate or relevant regulation. I think FTX has been probably the wake-up call, and we've seen the most impact in the US. I mean, Brian Armstrong this morning was talking about what he's going through specifically. But the bit of FTX being perceived as this donating to political parties and being part of the machine, and then pie on face when it blew up, has prompted regulators, I think, to do the right thing, largely, to move towards thinking about these things in a more timely fashion. Crypto moves so quickly that the principles-based approach that we've outlined here in the UK, I think, makes a lot of sense. We've seen slightly the US might be a bit more prescriptive in enforcement through, regulation through enforcement, if you will, which is a little bit more arbitrary and less consultative. So we think the UK has a good opportunity.
Yeah. Because, Sushil, you used to handle enforcement at the FCA, and so you're kind of well aware of what the thinking would be like there. Why do you think the UK hasn't gone the same route as the US with approaching crypto in that way?
I think they've been trying to take, a proportionate approach to regulation. They don't want to, I mean, the FCA's got like a number of objectives, right? You've got protecting consumer protection, enhancing the integrity of markets, and then enhancing competition, and with that sort of innovation comes with it. So that's not an easy feat to try and balance those three, especially in the world of crypto. So I think they have been taking a proportionate approach in looking at sort of the future direction of crypto assets, in trying to tread the fine line. And I think, personally, I don't know if I'm biased because I'm a former regulator, but I think they are doing a good job in trying to meet that line and sort of take a proportionate approach to regulation.
Mm-hmm. And how affected do you think the UK was? This wasn't really a systemic level for us yet in terms of the crypto crash we've just had, and there could be more in future, who knows?
I mean, the UK doesn't have any unicorns in the crypto space, whereas the US has the lion's share. Quite a few of them are no longer here, so we had to see that happen real time. So I think Sushil's right, the UK's been a lot more kind of probably low key, but now there is a clean slate, so to speak. We've not had thankfully, the big cases of firms going under. But there is an opportunity to say, okay, now that we have seen this blow up, what can we do in the UK that's fit and proper for the jurisdiction? And I think there does need to be a bit more proactive approach to create new companies here that can get through the process. Unfortunately, I don't think there's been any registrations this year for the FCA crypto asset MLR, which we can do better. I think there's a great framework in place now, and I think with the HMT consultation, we now have a direction of travel which the industry sees as quite pragmatic and good, using existing regs to bring things into the fold. But we need to live up to that, and we need firms to go through the process responsively and in a timely manner.
Mm-hmm. Yeah, and Sushil, as you mentioned earlier, only about 15% of applicants have been approved through that process so far, which kind of shows the FCA's attitudes towards crypto. How do you think the proportionate approach, as you called it, and that kind of lack of fast progress that has been happening on crypto regulation so far has affected the UK as a competitive landscape for financial innovation? Because it has all this history as a fintech hub, but in crypto, kind of slowing down a bit.
Yeah, I think, I don't think it's sort of hampering the number of applications into the UK anyway. I mean, you know, if we think about the fact that most of the applications actually don't see it through, you would think that that's a deterrent in itself for businesses wanting to come into the UK. But actually, I think I was at an FCA speech, like where they had a conference where they had an FCA speech going on, where they were actually surprised themselves that they haven't noticed a downturn in the number of applications. And even as a regulatory lawyer, you know, giving perimeter advice to firms, there are obviously still firms that are coming in wanting to do business here. And I think that the reason for that is because the UK has always traditionally had a reputation of having high regulatory standards. And the key aspect for these firms are investor confidence, especially in the current climate, where investor confidence is key. And for those, you know, sort of companies, it's going to be absolutely critical that they do get the confidence to ensure their longevity and their future, you know, potential.
Yeah, and Sean, you can probably speak to this a lot better, being an SME banker. How has it been in terms of the landscape for UK companies in crypto? What are they able to access? What are they not able to access? Is it even friendly here?
So there's no UK bank that is crypto friendly. We heard this morning that there are banks even pulling back from giving payment rails. There's various reasons for that. I think we've got over the AML issue with coin forensics and blockchain analytics. We can see now that these technologies actually help us with new tools to prevent flows of funds which we shouldn't be touching. It's funnily enough more the fraud side, where banks are seeing a risk that if they facilitate payments for retail into exchanges and those result in, say, lost funds for a retail consumer, the bank may be held liable. Thankfully, there's firms like us on more of an e-money basis that can still give access to payment rails with account numbers and sort codes to let these firms operate and build. But I do think we can do more. And hopefully with the regulation coming in, it'll give banks the comfort that they know, particularly the wholesale side of the market, deserves a level playing field with this equal access to other fintechs. And fintechs have had their own challenges getting banking payment rails, but I think that's one of the issues that we're trying to solve as a firm. And we hope the industry will have a little bit more comfort over time.
I mean, this is a room of people who are probably quite familiar with the way the fintech industry has grown, right? Where they've come from small startups that had access to something like the FCA's regulatory sandbox in order to be able to grow. And that's something that crypto hasn't largely had today. That might be changing, but it hasn't had it before. So Sushil, how do you think the crypto companies and crypto landscape can learn from how fintech went through its own journey over the last decade and bring that into the future?
I think that a good comparator would be, you know, if you look at open banking, for example. I mean, the UK has really paved the way when it comes to open banking. It's afforded, you know, sort of great customer choice, strong competition within the markets, and you know, ultimately bringing costs down for consumers and businesses alike. And I think the key reason for that is the introduction of regulation and new rules to try and force, you know, the banks to share customer data, obviously with consumer consent. And I think that has been a game changer for the industry. And I think if we think about sort of the current regulatory approach, as Sean was saying, banks are very risk averse in this climate. I mean, they've got lots of things that they're tackling at the moment, the incoming consumer duty being one, and the new obligation to act to deliver good customer outcomes, where there are retail customers involved, which is a huge threshold. So it's no wonder that they are taking a cautious approach to regulation, and also, you know, unfortunately for the crypto market, sort of pulling out services altogether. But actually, with putting in place a strong regulatory framework where it brings certainty to the sector, it brings certainty to fintechs, it brings certainty to the banking industry right now. And I think actually, when there is certainty, as with open banking, I think they're going to want to compete themselves, going into and throwing investment into crypto assets and their own crypto asset capabilities. So I think it could be potentially, in my view, a game changer, and I'm taking quite a solid stance there, but I think it does have that same potential as open banking did for us.
Yeah, and with the EU set to pass MiCA this week, MiCA, however you want to pronounce it, how does that kind of position against the UK? We've seen a lot of crypto companies in recent weeks saying things like Europe has become really attractive, they're picking hubs in places like Paris over London, and Brian Armstrong definitely talks up London's potential here this morning. But how are you kind of seeing that play out? Do you think that the UK has a long way to catch up, or is it really a level playing field now?
I mean, the mood music here is great. I remember last year when I was sitting in the audience, there was a speech by John Glenn on behalf of the then Chancellor Rishi Sunak, which set out a vision for the UK to be a global crypto hub. And that was monumental for us as an industry. I mean, we hadn't had that level of support at such a senior level. In practice, I think MiCA is a concrete framework. There's pros and cons, and it can be improved. But the consultation is the closest we have, and that's not yet in practice. And for firms to build, having surety is very helpful because it allows them to invest in jurisdictions where they know they can have a future. Paris is definitely putting its stall out to attract firms. And it's actually a call to action for our politicians that there is a moment for the UK to build on its traditions of FinTech, technology, centre finance, and law. I think common law here is such an asset to particularly our space. But we actually need to pull that by the horns, and I think the service levels for us at the coalface are what we need to focus on, not necessarily just the frameworks legally, but the lived experience, so to speak. That's where I would want to invest.
Great. Well, thank you both for joining me. I think it's been a really interesting conversation, and I hope you all enjoyed it too.